All right, folks. Remember yesterday I reported on this Terry Smith. Really, it's just amazing what's happening. Considered an investing legend on Wall Street, the British Warren Buffett, if you will, made a major shift in his approach. Now, I don't think the financial media understands what's happening here. This is a big story that's going to keep spreading. In fact, some are now saying that this is Smith's downfall. But others understand that the job is ultimately to make money for your clients. And sometimes the market has a greater say than your philosophy. My next guest did drop in from out of town, one of the smartest guys I know. His mandate is always to be invested. Great person to talk to about this. Belpointe Asset Management, their chief strategist, David Nelson. All right, David, so here's the thing. What Smith is saying, one of his things is he's saying, listen, active investing versus passive investing is almost not, it doesn't matter anymore because passivism has passed it. So essentially, passive investing is momentum investing.
It is.
There's no way around it. So if you're a money manager, you have to make your people money. Well, how can you avoid it?
In some ways, we're all that. We're all momentum investors because we typically get rid of the losers. You add to a winner or you buy a new winner, and 52 weeks later, you look at your portfolio, and a lot of your stocks are at or close to 52-week highs, the very definition of momentum. So momentum as a strategy, there's nothing wrong with it. The Sharpe ratios are very high. It's one of the best strategies on Wall Street. The downside of that, it's got a very fat tail.
All right.
And it's an escalator going up, it's an elevator shaft going down, and we just experienced that the last couple of weeks.
Well, I guess then the caveat is, so if you're going to be in these momentum names, you can't have tight stops. You should probably know more about what you own so that can help you ride through these things.
If you had tight stops, you're gone. You're not even in the market anymore.
And that brings me to one thing. So Terry Smith, one of the stocks he loaded up on is GEV. Last time you were here, you gave us GEV, but you've liked this stock for a long time.
I've had it for a long time, but I took some off the table.
But do you take some off? Do you ever put it back? Or do you say, okay, you know what, if I took some off at 100, now it's 150, that's when pride and ego may get in the way.
The problem with, if I don't do that, if I don't run two books, if I don't have a momentum strategy on one side and a low volatility strategy on the other side, I'm going to get shaken out of the market. And that probably happened to a lot of people in the last 10 days.
So today, for instance, Pepsi is a name, down 4 or 5 bucks. It's not a lot. And it's one of these core names that people tell you, hey, barbell strategy, have this on one side, have a GEV on the other side. Can you cheat to one side to the other? Because I think if you go one for one, you're not going to be able to outperform.
No, maybe it's not one for one, and you're going to certainly lean to the momentum side. I certainly do. But you're going to need some of it because if you look at the 52-week high list, there's a lot of names out there that have nothing to do with tech, nothing to do with AI. You've got names like Coca-Cola is up 17% this year.
Right. Let's talk about some stock ideas that you like right now. For instance, sticking it sort of to the theme here, Broadcom is a name that you still like here.
Yeah, I still like it, and you can see what happened to it. It got really slammed after.
This went down to the 200-day moving average. It held, which is a good sign.
It was, and it's down about 20% coming into today. You know, it was more than just the fact that they missed the whisper number. There was some concern that they were going to miss out on Apple and they were going to do something different. Well, they did. That news is out there. They cut a $30 billion deal. So when this is all over, this is going to be a name you're going to have to own.
And this is, again, folks, when they had that earnings report, it was phenomenal. There was one little part of it, to your point, that added some questions about these custom chips. But to your point also, Apple may have put those
They're a leader in
questions
custom silicon.
A lot of folks are now speaking, rotation is hot. AbbVie is an area, this whole area, people are saying this is where you kind of want to be. What's this spike? All of a sudden it just came on out of nowhere.
Yeah, I think part of it was the rotation, you know, because everybody piled into the name. But if you expand this chart even longer, it's still a pretty good name. Look, this is a company 4 years ago that was losing a $20 billion a year drug. Humira. Now it's a fraction of that, but they replaced it. And a lot of these names out there, there's a whole host of names in the healthcare sector that are really delivering on the top and bottom line. You're getting a handsome dividend as well. This is the other side of that portfolio. This name was probably up when semis were down.
Same thing with Lilly.
Same exact thing. You could buy the whole group.
Right. And of course, it looks like they really have won that, for now, the GLP race with Novo, and then, of course, all of the other potential uses for it. This could be a miracle.
It's just part of a portfolio. You need both sides of that because the ride matters as much as the destination. If you shake everybody out of it, if you're managing money, you shake everybody out of the portfolio because you had so much money and momentum. When you get to the other side, you're not going to have any passengers.
All right, let's talk about that. I got 30 seconds. Want to give a plug to your ETF. NELS Nelson. How's it going so far?
It's going well. It's going well. I'm coming up on my first year. Can't talk a lot about it because I'm always compliance when you're on TV, but it's been real exciting. It's a very, very different animal when you're running in the ETF world. Pretty exciting.
Yeah, good stuff, man. Great seeing you.
Thanks for having me.
All righty. All right, folks, coming up, SK Hynix. If you're not familiar with the name, after tomorrow, you might be. In fact, there's 196 billion reasons to believe this is going to be a hit and that maybe the memory trade still has some legs. The great Dan Newman, Futurum, here to talk about that and also what's probably holding your portfolio up. We'll be right back.